Hi, welcome back to another episode of Wilkin and Gutton Plans, the Balance Sheet Breakdown. On today's episode of the Balance Sheet Breakdown, we're going to be talking about tax residency certificates. I'm Chris Frederick, a partner with the firm, and joining me this month is one of the leaders of our international tax practice, Darko Naumoski. Darko, thanks for coming on board. Thanks for joining another podcast episode with us.
Thanks, Chris. Glad to be here.
This is, to me, a bit of a foreign, no pun intended, topic, right? I know that you and the team have done this for a while. I know some of my clients have gone through this application process for the U.S. tax residency certificates. I don't know much about it. And so maybe we can start. What are some of the quick facts? What's some of the brief context? What are we talking about today?
So we're going to talk about U.S. tax residency certificates. And when we talk about residency, not tax residency, but residency, it means different things to different people. If you're an individual, tax residency for you may mean a green card holder or living in a country for a long period of time. But that's not what we're talking about here. We're talking about tax residency. And tax residency in the context of residency for income tax purposes. So that means different things for different taxpayers. For individuals, it may be a green card or citizenship or meeting the substantial presence test, which I don't want to spend time talking about here, but that's something that we look at. For corporations, it may mean that corporation is formed in the United States. For partnerships, it may mean something different. It needs to be formed in the United States, but do we have U.S. partners? S corporations, trust estates, and so on and so on.
The goal, right, is to kind of keep elaborating a bit more on when we see this getting filed, sure. But also talk a little bit about what it means to fill the application out. What do you get? And hey, once you've gone through the application process, how is that helpful or meaningful to many U.S. taxpayers, individuals, corporations, pass-through entities, trust and estates, that really this is applicable to a lot of people, depending on, facts and circumstances.
So let me take a step back first and talk about why do we need this and why do companies or individuals or any U.S. taxpayer file for this. So in general, when there is payment to foreign individuals or taxpayers, whether it's from the U.S. or from foreign countries paying the U.S. taxpayers, generally there'll be statutory withholding rate. U.S. has a 30% rate withholding tax on any payments to foreign individuals unless certain criteria are met. Foreign countries have similar rates. So what the residence certificate allows is for U.S. taxpayers to obtain a reduced rate of withholding, sometimes down to zero, when the U.S. has treaty with that foreign country. The U.S. has treaties with 66 foreign countries, and if that foreign country is on our list, then we can see whether the treaty applies and therefore go through the application process. Now, right. One of your questions was, what is the application process? What do we need to do? The application process on the face of it is simple. It's a 3-page application on Form 8802. It asks about the applicant's name and address. It asks about the type of entity or taxpayer it is. Asks about some income tax questions. Then there's a penalty under perjury statement that needs to be signed. We need to add how many certificates we need per country. And then once it's signed and completed, then we submit it to the IRS. Pretty simple, pretty straightforward, but once you get into the details and different types of taxpayers and applications, then it gets a little bit hairy.
Right, because like you said, there's how many countries with different treaties?
66 countries. We are 95 in the world, so
yep.
A third of the world we have treaties with. Granted, some of those countries are not going to be relevant to us because there's no economic ties, and
yep.
There's not a lot of economic activity between the U.S. and those countries, but still a third of the countries.
Yeah. Darko, I think what you said earlier is something that I think is worthwhile highlighting. Being able to potentially reduce or eliminate that withholding from what is now 30% down to potentially zero is a great opportunity for a 3-page IRS form.
Right. I mean, it is, but the devil's in the details. This application needs to be filed every year with the IRS. Now, there is a 3-year process that certain taxpayers can enter into, but that's a limited opportunity. So every year there's a form to be filed. The processing times of this application are at the minimum 6 to 8 weeks, sometimes longer. So if taxpayers are seeking this early in the year, then they need to file as soon as the window for filing opens,
the forms
which
open
is which is December 1, the year preceding
Interesting.
the certification year. So we're coming up on the filing due date, the when the window
Right.
opens.
The new window for
December-
next year.
For 2025.
Yeah.
So we'll start with our clients. We'll probably reach out soon enough to see if they need a certification this year
Yeah.
or in 2025 and start that process early so that we get them in the queue for them to get processed. And then, we file the forms.
Yeah. So I feel like this is an interesting one where right, this is proactive filing. 6 weeks before the year ends, the window opens. And
Yep.
so, everybody knows when the window opens, and I'm sure
Yeah.
there's that queue fills up pretty quick.
Yeah, the processing times are early in the year are really long.
Yeah.
Because they're just getting thousands and thousands
Right, and everybody wants to get 'em in
of
and done.
application. The way these applications are processed is in the Philadelphia IRS Center, and they're processed manually by people
Wow.
like you and me.
Yeah.
Every application gets not picked up, but it's scanned in, I imagine.
right.
The whole document file, they review all the documents. Do you have the requisite perjury of penalty statement signed by all
Yeah.
required taxpayers?
Yeah.
Do you have the required power of attorneys attached? If this is a new company, have you attached the articles of organization?
Interesting.
There's a lot of
Yeah.
little tweaks that you have, or maybe you had a corporate reorganization.
Yep.
If that happens, well, they're not going to process until they see what exactly happened, whether through a summary or some type of a document attachment. We got to paint a picture
Yep.
for somebody like you and me reading this document or this file to say, okay, I understand what's happening here. Yep,
Right.
I can issue the certificate. No, I need more information.
Yeah. Right. It's interesting that everyone is reviewed manually. I feel like these days more and more, especially like the IRS.
Yeah.
It's automatic this, automatic that. It's unless you don't fit the parameters, the computer system doesn't kick it for auto review.
Nope.
This is
as manual as we'll get. Well, get this. In order to file this application, you have two ways. One is the old mailing, paper
certified.
copy,
Yep.
certified, right? We still do that for
Yeah,
some taxpayers
yep.
because we can't get around the e-filing. The e-file way, I call it the e-file way. It's not e-filing.
It's electronic, maybe.
It
right?
is the faxing of the forms.
Faxing. Interesting.
So most
Yeah.
of our clients, we fax because it acts as an electronic copy. We get an electronic confirmation
confirmation
that
of
we
receipt,
have
yeah.
in our files, and the IRS receives it in PDF. So which
Interesting, yeah.
helps in their system, and it helps us
Yep.
track it. But they have not processed this form to be able to be electronically filed.
That's interesting. That's interesting. Right. So faxing gets auto scanned to a PDF, and then next thing you know, it pops up on my screen for review, or the agent's screen for review. That's
a
interesting.
little bit more complex on their side.
Yeah,
but
of course. I'm sure it is. I'm sure it is. That's interesting. It's okay. So we file I get my certificate, right?
Well,
which,
don't rush.
okay.
You
excuse me.
file.
I filed.
And you wait.
I've waited.
And you wait.
I've addressed any concerns that maybe the IRS has raised with my application. I've given them articles.
Right.
And
Yeah. So the way it works is within 60 days, hopefully, the IRS has sent a letter to the taxpayer saying, we received your application, we're processing it.
Yep.
And that's the end of it because next communication will be the actual certificate.
Okay.
There is a letter that may say, we received the application, we need more information. It is imperative when that letter comes in that somebody calls the IRS or looks at the letter and responds immediately. Because if you don't, it further delays the application, and after a while, after 30 days, they'll just close it.
Right. Those are
Which will
application
mean
was insufficient.
you have to resubmit
Yeah.
another set of waiting times.
Yep.
One thing that we do for our clients is if within 60 days we don't see anything from the IRS, we just start calling them.
Yep.
The problem with paper applications, with faxed applications, with the IRS, with this system that they have,
Yeah.
is that sometimes applications don't make it. They just get lost in the shuffle.
Right. We have our fax confirmation, but
We don't have
They don't
we don't
have
have a copy of your
Yeah.
application, so then
Yeah.
we just resubmit it
Yep.
and move it forward.
yep.
That happens
Yeah.
often.
That's well, I imagine, right? If everything is being sent there, USPS or faxed.
We don't have the usually in our tax return world, we have a e-file confirmation with the MEF system, and the IRS
Right.
has an
It's
electronic
all
copy of it. They
auto-connected.
can't say we didn't
Yeah.
get it. We
Yep.
know you did.
Yep.
Here it's a fax, whether it's somebody picked it up right or not, or they got
Right.
jumbled in another file.
Right.
It's the luck of the draw sometimes.
Right. Simple process, simple form. But if we're calling for, 8, 10 clients, because after 60 days we haven't heard anything, it's, even for us, it's a bit more administratively involved,
Yeah.
it sounds,
Yeah.
than the average filing.
Yeah.
Okay, so We filed, we've waited,
Mm-hmm.
we've answered some questions,
Yep.
we've waited some more,
Yep.
we get our certificate.
Yes.
And so what does that mean? Where have we maybe seen that be useful?
Sure. So let me just clarify. When we get a resident certificate, it is a certificate per country. So the certificates are they're an official IRS
Interesting.
document.
Okay.
They have a watermark and they're signed by the
Wow.
field director of the Philadelphia office. Having said that, once our clients receive the certificates, for the most part, they know who needs them.
Yep.
They've been dealing with their clients or customers overseas. They know they need to provide it to a certain withholding agent, which withholding agent can mean a foreign company that is required to withhold under their statutory
Yes,
laws in
right.
their local country. So they immediately flip it over, whether it's paper or electronic, and their job is done.
Yep.
Sometimes our clients will need to apply or submit a registration with the foreign country, so they're
Okay.
on record that they're receiving revenues from a
Yeah.
source in their country, and they're taking advantage of the reduced withholding rate.
Interesting. Okay.
Other times, what we've seen is in other countries is they'll have to hire tax advisors, and they'll have to submit the application. But sometimes the application can be a 5-year exemption, which is very beneficial.
Yeah.
So you do this every 5 years.
Yeah.
Cuts down on cost on administrative
Yep.
task and everything.
I didn't realize every country. I thought it was, hey, if I submit my application once, I get my tax residency certificate, and that's good for all 40-something countries that we've got treaties with. I didn't realize that I'm submitting individual applications. So if I'm a big corporation working with, say, most of the countries in the EU,
Mm-hmm.
I might be submitting 8.
You may be submitting 8 certificates within each country in the EU.
Yeah.
The application process with the U.S., with the IRS system, is one application for all countries where you need certificates.
Okay.
And you pay one fee.
I see.
We haven't talked
So-
about fees yet.
Right. So initially, I might say, come at the beginning of the year, I'm working with Germany, the UK, and Spain.
Mhm. Yep.
So I fill my application.
Yep.
These are the 3 countries that I have
Exactly.
customers in, and they say, okay, great, you're approved. Here's your residency certificate for the Germany, the UK, and Spain.
Correct.
What happens if in the middle of the year I start working with France?
If you can't predict there's a
Yep.
country you may be working with, then there'll be a new application required.
New application. And saying, oh, I forgot. Application for France.
Yeah, I mean, it's great if we have a crystal ball, we can
Yeah, of
see
course.
who we're going to work with,
Yep.
and especially if we're in the EU and there's leads in certain countries.
Right. We'll be a little generous and
Yeah, yeah.
take all
So
of
it
them.
doesn't cost the customer, the applicant, any more or less
Okay.
to have more or less countries or more or less certificates. You may be working heavily in the UK and you need 20 certificates because everybody is asking for this one, all of your clients.
Got it.
And you may be working with 3 clients in France. Well, I need only 5 to 10 certificates, and the IRS doesn't charge extra for that.
Okay.
They'll
Okay.
mail the paper copies, but with the number of certificates we request.
So speaking of charges and fees, you
Yeah.
alluded to it.
Yes.
What are they?
So it will shock you, but they're not extravagant. If you, Chris, have some investments, say in Germany, you
Yep.
mentioned Germany, you like Germany, and a German company issues you a dividend, you're like, wait, we have a treaty. Can I get a reduced rate so you don't hold?
Yeah.
You'll have to get an application. You have to get a certificate, and you'll apply. It will cost you $85 for the application, plus whatever you pay to the advisors
to the professionals
to get
that are
that
gonna help me.
through. Now, sometimes individuals are easier. Sometimes you can get it do yourself.
Yep.
With some guidance, fine. If you are a non-individual, so we're talking about trust, estate, corporate, S-corp, partnerships, LLCs, then it's a $185 application.
Okay.
It's still nothing,
pretty nominal. Yeah.
Nothing to write home about.
Taking the example that you just said, right? I have an investment in a German corporation.
Yep.
They issue a dividend. If I do nothing, they're going to withhold my dividend at
Whatever the statutory rate is.
statutory
I don't
rate.
know Germany's
Right.
statutory rate, but
Let's
there's
just-
some
well,
withholding tax.
there's a guaranteed withholding tax. It has to be, right?
Yes.
But
Generally.
right. But I could fill out and apply for my tax residency certificate and say, listen, I would much rather you not withhold at the standard statutory rate. Like, I'm a honest, good filing citizen here in the U.S. I will not commit fraud. I promise. and I can get that rate reduced.
Yeah. So 2 points here. Right. Every country has its own set of rules of how they apply the treaty benefits. Most countries will require a residence certificate.
Yep.
Some will not. That's one. 2 is if they withhold at a certain rate, and dividend income is a good example because it's by default foreign sourced if it's paid by a foreign corporation.
Okay.
So that foreign dividend is a foreign source income, and then the withholding tax becomes eligible foreign tax credit. So if you say get $100 of dividends from the German corporation, you pay tax on $100, but you really receive 95 because they withheld 5%. So that $5 you can use as a credit to offset your income taxes in the U.S., your federal income taxes. We're not talking about state, we're just talking about federal.
Okay.
Now, in a different example, that payment from Germany may not be a dividend, maybe something else.
Right.
And it may not be considered foreign source income.
Right. It's my customer.
Yeah.
And
if you're providing personal services, it may not be considered foreign source income. And that withholding tax may not be creditable, or it'd be difficult to credit. So then what do? You receive, on a 30% withholding, you receive $70. You have this $30 withholding that you can't use as an offset to your tax liability. So maybe you revert to deduction. But that's a discussion, that's a modeling exercise.
Right.
And of course, we're usually talking about much bigger numbers than $130.
And that's not dollar for dollar either, right?
No, the deduction is a reduction of your taxable income. Yeah. So it based on your tax rate,
right? 30% of 30% of exactly. It gets chopped up pretty quick, and so having a little bit of foresight makes a difference.
Of course,
both for net cash flow at the end of the year after all tax filings, but also it sounds like certainly for today's cash flow. I'd like to get every dollar in my pocket today. Let me deal with paying the tax.
Let me figure out my tax liability. If I can reduce the withholding, most of our clients will choose to have more cash in their pocket and figure out their tax liability because that may be impacted. I don't know, if you have a corporation that is that's a startup, they're generating losses.
Yeah.
Withholding tax, they're not going to help them any.
Right.
Because they probably have zero tax liability in the U.S. So the moment we can reduce that tax rate and help their cash flows, we're all for it.
So if we're talking about planning opportunities, right, the window for this opens up again December 1st, right, which is around the corner.
Yes.
What sort of folks, companies, entities would get most benefit by really doing an additional analysis? Is there really an opportunity for everybody that has withholdings on foreign sourced or income generated in non-U.S. locations?
Right. For most part, it'll be most of our clients are businesses that are applying for these certificates. And regardless of type of business, meaning is it a C corporation, is it an S corporation, is it a partnership? If businesses are dealing with foreign customers, they're receiving income or selling product to a foreign entity or a foreign individual, they should think about whether the foreign country has a statutory rate of withholding on payments to foreign individuals or U.S. individuals in our case, and what they will look like for their a cash flow or their tax structure and tax minimization efforts.
If I generated a bunch of revenue from a foreign source last year and I had withholdings and I don't want that to happen again,
we should talk.
We should
have a conversation on what is generating that and whether res certificates will help. Or is there other methods we can minimize that? I'm going to call it cash and tax leakage.
Yes. And to me, that's kind of the call to action, right? Is there's a whole lot of U.S. corporations, kind of focusing on the corporate side of it, that this isn't super helpful for, right? They do all their business in the U.S., but for those that are generating revenue from non-U.S. sources, especially if you've been subject to withholding, there's a potential benefit here.
There's discussions and planning to be done.
Yeah,
for sure.
Yeah, and I think that's a good spot to cut it off at.
All right.
So obviously, really appreciate you being on the episode of the podcast here with us. I know I learned way more about this than I've ever known. So I for one appreciated the information.
I'm glad to be here, Chris, and glad to share some of the things we've seen and done with our clients, and hopefully it provides some benefit for some other folks.
For sure. That brings us to the end of another episode of Wilken & Gutton Plans the Balance Sheet Breakdown, where we help you make sense of the numbers.